How's everyone doing? Good? It's so nice, honestly. It's a bit of a relief to be presenting to a group of mostly Canadians, I want to say. Show of hands, who was born in Canada? Let's start. Born in Canada? Who's connected to Canada? Hopefully everybody else. Nice. I was born in Lebanon, grew up half of my life in the Middle East, but we immigrated to Ottawa in 2001. So that's my nexus to Canada. So grew up half of my life in Canada, then moved to Chicago 4 years ago to basically open up and head the office for the Toronto Stock Exchange. So mostly working with private companies, and much like you'll hear today, helping storytell what the Canadian capital markets look like, what would it take for a private company to actually do this, and hopefully valuable for folks in the room who don't even have visibility or even desire to go public at any point, but just some of the things that we would look for in public markets that I think would be helpful for any company listening to this. So hopefully of value. This is all about you, to be honest, and especially as folks with nexus and connection to Canada, hopefully you find it of value. Before we get going, just want to make sure Jay and Sean get the chance to introduce themselves as well.
Yeah, sure. So Jay King from Cassels. We're a originally Toronto-based law firm. Now we have offices in Calgary and Vancouver. Part of what we find attractive about doing business in the United States is that because we don't have offices in the U.S., we get to work with a number of different partners at law firms, auditing firms, and whatnot, and help businesses access the capital markets in Canada. I've been practicing with Cassels since 2003. Corporate securities lawyer, generally industry agnostic. An expert in mining, but also do a lot of real estate. I've done some aviation work, tech, cannabis, broad range of things, and help people access the capital markets and navigate the regulatory environment in Canada.
Yeah, we've got offices now in Vancouver and Calgary as well as Toronto. My background is a little bit different. I came up doing more entrepreneurial ventures and some in-house work, so I've got a lot more familiarity with that side of things. I tend to try to think of myself, and all of us are trying to think about business-oriented solutions as opposed to just this is the legal answer and you can't do that. Yeah, same thing. Industry agnostic. We Jay and I have a specialty in corporate finance, M&A, taking companies public from a lot of different places. In the last several years, it's been mostly out of the U.S. looking to list in Canada, but we do all kinds of things. And as an example, I had a robotics company in food preparation come up, and they needed help getting across the line with the electronic, anything that plugs into a wall needs certain specifications and go through. So we're a full service firm, and we can do anything, M&A related, private equity, all that stuff. I mean, today we're talking about stuff related to going public in the exchange, but we can help them with a lot of different things across the border.
Yeah, maybe just a bit louder, I think. Are folks having a hard time hearing us at all, or?
Sean was a bit late back here.
Okay.
Just getting over a cold.
And to the folks, by the way, virtually, didn't acknowledge you, but it's good to see you. Thanks for being here. Okay, so good to move on. Yeah, we're excited. I know it's like 5:30 p.m., but hopefully we'll make it count. Yeah, I probably should have had those bio slides, but it's okay. I think people in our industry, capital markets, finance, we're not the most creative. I usually like to start presentations with an introduction, and I couldn't think of one, to be honest with you. So I know we spoke, Mike. Hopefully you'll like this one. We prompted ChatGPT, and I was like, "Hey, we're doing a presentation in Denver to a group of very sophisticated professionals that have a tie to Canada. How should I intro? Like, how do I open this?" And here's what was recommended. Ladies and gentlemen, thank you for having us here in Denver to talk about the Canadian capital markets. Now, I know you might be thinking, why are three guys from the Great White North here to talk about finance in the Mile High City? Well, it's very, very simple. Just like the Rocky Mountains, Canada's capital markets have their own peaks and valleys. And trust me, there's more to it than just maple syrup and ice hockey. So let's embark on this financial expedition together. And by the end of our journey, hopefully you'll be saying, yay, like a true Canadian investor. So, right? Mike, is this changing your perspective on ChatGPT? Maybe. I don't know. We'll talk. Yeah, exactly. Yeah, very optimistic, right? It's a good way to start. So there you go. Good intro. We always like to start in terms of capital markets, and especially public markets. We always love to start with why even care, right? Like, what's the vision here? Why would a company ever embark on something like this? Because it is hard work, and Canadians always love hard work. So there's a couple of reasons. These are all from CEOs of these companies. I'm sure a lot of you will recognize a name like Shopify. But some of the reasons to go public are growth, right? We want to raise growth capital. We want to grow the company. We have our eyes set on going from 50 million in market cap to 200 million, and this will allow us to do that. So that's growth. Capital, no surprise there. The public markets are just one avenue. So any company in the room, if you've ever raised financing or any kinds of capital, you have a menu of financing options, right? Venture capital, family office, private equity. This is really just one of those options. Profile is a big one, right? Because think about it. You're public. I mean, that's literally, it's in the word. You're visible, you're seen all the time, and it's actually very embedded in what you do, both as a management team and your product, your service. So visibility and profile is very important. And the last one is M&A, right? Being able to actually acquire other companies when you might be too early to do that and you don't have enough money to do that. You can actually use some of your shares as currency to go and acquire other companies. So that's some of the reasons. These are all from CEOs themselves, not from the exchange. A bunch of Canadians would love to see the slide. Usually, again, I'm presenting this to Americans, and they're like, "Great, you're one of the top 5 hubs. We're the first, But Canada truly is one of the top 5 hubs for equity capital. What that basically means is what you see, all these gray shaded regions are the top 5 hubs for equity capital in the world. And so in the past 5 years, TSX and TSX Venture helped companies raise more than $207 billion. So pretty significant, right, on a global scale. It's not just Canada-centric, as much as we love telling the Canadian story. A lot of our daily trading actually originates from outside of Canada. So how many of you folks recognize all these names, right? JP Morgan, right? Macquarie, Citi, Raymond James. All these asset managers actually partake in our markets. And so 40% of that comes from outside of Canada, primarily in the US. We're definitely a diverse market. A lot of folks, especially if you're familiar with capital markets, in Canada, you probably thought of us as a mining country, which has a lot of truth to it, right? Historically, mining, resources, oil and gas, still to this day, very important sector. But hopefully what this chart shows you is how diverse our markets have become over the years. So it's a total market cap of $4.1 trillion. That means that all the companies combined that are public on TSX and TSX Venture, their combined worth is 4.1 trillion. I mean, that's it's larger than some economies in the world, right? So very, very significant. You can see kind of some of the breakdown. Financial services, no surprise there. Big banks, insurers, but it's more than just mining. We're also actually one of the top exchanges in the world for international listings. So these are international companies headquartered outside of Canada that go public in Canada. The majority, as you can see, from the US, that's 50%, right? We have 126 companies headquartered in the US that are listed in Canada. That's what that's telling you. And over the past 5 years, these companies together, about 251, thankfully it's there, raised 25 billion over 5 years, from 2018 to now. Again, just showing you kind of the same thing, no longer just a resource exchange. How many folks, just show of hands, recognize Shopify? If I didn't show you this list, would you recognize any other tech company on this list? Yeah? This is great. That's why I love this group, Well, it's good. I'm glad to hear that, because for the longest time, I think the Canadian story, right? Nortel, RIM, BlackBerry. I mean, it wasn't the most positive for Canadian tech. We had some amazing success stories, and then it kind of had a couple bumps along the way. But with Shopify, there's actually several substantial tech unicorns that we have in Canada. A lot of folks might not even realize, right? Constellation Software, $58 billion in market cap. CGI, OpenTech, Ceridian is based actually out of Minneapolis as well, $13 billion. So those are some of the examples. If there's one, I would say main slide I want you to take away from this presentation, it's really this one. I think it would be amazing if you take away this quick story. So most folks in the US are very familiar with going public here, right? You go public on NASDAQ or the New York Stock Exchange, right? But primarily when you see IPOs in the US, many of them are much later stage, right? Sometimes you'll see earlier stage companies go public here, but for the most part, these are, larger companies. The one very unique advantage that we have in Canada is our markets are broken down into two exchanges. That's why we call it a two-tiered model. So you have TSX Venture, which is really an early stage exchange. So think of it as, hopefully some basketball fans, I always use this analogy. Think of it as you're a basketball player. You're going to play in the NCAA versus the NBA. So before you go and play for the Lakers, right? Or the Nuggets. That was a test. All right. That was a test.
Yeah.
Thank you very much.
All right, we'll take over from here.
If you play for the Nuggets, before you play for the Nuggets, it was a test. All right. You play for the NCAA. Very much the same. So instead of telling a company, hey, day one, go public on the Toronto Stock Exchange, a late stage exchange, very similar to NASDAQ, NYSE, why don't you start on a junior exchange that's made and tailored for an earlier stage company? All that really means is the listing requirements are more flexible. It's designed for companies that are less than 200 million in market cap. So you're still going public, but the requirements are more favorable for a company of that stage. And so on average, companies are raising $6 million, right? Not very different than Series A. And on average, their market size, so the company size, is 85 million. Whereas on TSX, you can see the difference, right? 189 million is what they're raising on average. And that's typically what their market value is when they go public. And this is what it looks like. So that whole NCAA to NBA, before you play for the Nuggets, you start with some university team, you get your legs warm, you get the experience as a player. All these things are important before you hit the main stage. And that's what it's showing you. So close to 760 companies have gone from this junior exchange, TSX Venture, to the TSX. 760 companies. 83 of those today have a market value of more than 500 million. So very significant, right? You can see why it's almost like an incubator, but on the public markets. Colorado, this slide is for you, all right? We actually have some serious substance here in your city. Right? We have 17 issuers in total, so 12 on the TSX, 5 on TSX Venture, our small exchange. The total market cap of those 12 companies on the TSX is 64 billion. So they're quite sizable. Like this isn't, hopefully what this demonstrates is there are some serious case studies for you locally. And you can see on the right-hand side, just some examples. Some are in tech, some companies are life sciences, mining, oil and gas. So a pretty diverse set of companies. All right. Hopefully by this point, so far so good. Yeah, making sense. Hopefully by this point, you're like, all right, we kind of get the idea of this Canadian market. But if I was in your shoes, honestly, and we get this question immediately, it's like, why should I care? Right? I'm a US CEO. You're telling me to go public where? In Canada? So why would I understand you have a model and it makes sense that you have some examples, but why should I even pay attention to this? If you were to go public tomorrow and you're a tech company with $1 billion in market cap, so you're a unicorn, you would be the 22nd largest company in Canada. So you'd be among the top, call it top 30 to make it easier. In the US, that same profile, if you go public tomorrow, you're among close to 400 other companies that are similar and probably larger. So $1 billion plus in market cap. There's 387 companies. Again, remember the whole point of going public is to be visible, right? You want to be seen. And so now you can kind of see if you're a $1 billion plus company, you're a much larger fish in what at this point is a bit of a smaller market in comparison. Litigation is not my forte, so I'll let Jay and Sean just shed some light on another reason why this makes sense.
Yeah, sure. So one of the things that we talk about when we're discussing with prospective issuers that are looking at accessing the Canadian capital markets is the regulatory environment and the framework that we have in Canada. And Canada is much less litigious than the United States. So if you have a class action lawsuit, or if you you just have a regular lawsuit of any magnitude, the courts are less likely to award massive settlements that you hear here in the United States. That becomes attractive for a number of industries, across the board, because it limits the risk to directors, officers, to the business itself, and it makes it a little bit more friendly business environment.
Oh, it was moving. Cool. So again, I'll let Cassels talk about this, both Jay and Sean, but really what you're seeing here is another very important piece of it, which is, and you'd probably be surprised, but a lot of companies that are listed in Canada are dual listed. So what that means is they have a listing on TSX and NASDAQ or NYSE. Beautiful example is Shopify, the one we all know. When they went public initially, they went public on TSX and the New York Stock Exchange day one. So it's very possible there's more than 200 companies that are dual listed. And there's a reason why this happens, because it makes it a bit easier for companies to do so. Jay, maybe you want to...
Yeah, so going back to what I had said about being industry agnostic, part of my early experience as a lawyer was dealing with mining companies all over the world. But because Canada is the mining mecca on a global scale, we would often get inbound calls for companies that were listed all over the world, but predominantly on the ASX and on the AIM or London Stock Exchange. And going back to George's point, it was you wanted to be visible. So notwithstanding that their mine and management may be in one of those jurisdictions, they wanted to be listed here on the TSX or TSXV because they would be visible. And when you speak to going public from the U.S. perspective, one of the advantages is that we have an earlier entry to market and to be public in Canada than we do in the United States. So we've identified a gap, and that gap, as a result, can be filled by going public in Canada and using that as a stepping stone to get dual listed NYSE, NASDAQ when the company has grown to a certain size. And so it's not that you're picking one or the other. It's an ability to take an opportunity at an earlier stage to get liquidity to use the currency for acquisitions or what have you, and then at the appropriate time, once you get to a size and scale, that you can then dual list in the United States.
Awesome, thanks, Jay. There's more good news. It's actually less expensive. See, it's not just our currency. We're favorable on this part. The biggest reason, again, is because, and I don't know why there's apologies for this. There's a bit of formatting issues. Nonetheless, what the numbers on the left are showing you is really the market size of these companies and what the cost would look like. So again, because in Canada you're able to go public on a junior exchange first, you have some cost flexibility there too. So you can see from the first graph, if you go public in Canada, the threshold is very different than what the minimum starting point would be in the US. That's really what that's telling you. And again, the above prices are in Canadian, below are in the US. So I'm just going to leave that there. So there's also, we're not going to spend too much time on this. I know we're close to the second happy hour. Just want you to know there's different ways to do this in Canada. It's not just your regular IPO, right? And an IPO, as some of you may know, is you basically work with an investment bank. You go on what they call a roadshow. They take your story and try to sell it to some of their clients that they represent because they think they might be interested in what you're building, and they'll try to raise financing on behalf of that. That's your typical IPO, very standard process, much like what you have here in the US. But there's also different ways to go public. And
yeah, in Canada, certainly, I know, having toured a lot through the US, RTOs typically have they're not regarded quite as fondly as IPOs that get all the splash. But there's a number of advantages to the RTO, or going down the chart, the qualifying transaction is a specific type of RTO, which we can get into in the social hour after. But it's important to realize there's a couple of advantages, and I'll give a story going back a few years where we were looking at dual list a company. They probably should have done an RTO. The window to market had opened up. It was an agriculture company. It was particularly favorable at the time. Had they just listed in Canada, we probably would have gotten public within 60 days. But they wanted to dual track. They wanted to list NASDAQ at the same time. So we were bound to their timeline. The company was going to go public at the same time. As a result, it was a 6-month endeavor. And they wanted to IPO. IPO means that you do a roadshow and all the money gets raised at the end. And when we got to the very end, it was July. All the fund managers had gone off to their cottages. there was no money, and this $200 million IPO collapsed, and there was lots of legal fees. Had they done an RTO, they could have done a different procedure and raised the money ahead of time. And so I've just done one with an oil and gas company based in Colombia as an example, different case study, got them public fairly quickly, but they raised money ahead of time. It sat in an escrow account, ready. All that has to happen is you have to complete your go public transaction and the money's released. So you've got deal certainty, you've got funding certainty. You don't have this question mark about, am I going to get the 100 million? Am I going to get the 50 million, 20 million, whatever it is you're out to raise, or are we going to fall short of the amount that is needed and risk the deal collapsing? So we see a lot more of the RTOs, perhaps a little bit less expensive, perhaps a little bit quicker, but it brings deal certainty so that you've raised money ahead of time. You spent a little bit of money, but you've got the money, as opposed to spending a ton of money and hoping that it's there at the end.
Yeah, one thing I'd also add is that at the RTO QT level, the only regulatory review is the TSXV or TSX review. You don't have the Canadian securities regulators. Canadian securities regulators equivalent of the SEC. When you do an IPO, you have the SEC and you have the exchange weighing in on your disclosure documents, and that can slow down the process. And it can
they're not as friendly as George.
Yeah, and it can oftentimes, if you miss the window, like in Sean's example, you can hamstring a transaction.
Awesome. I'm going to skip ahead just a little bit. Again, there's a lot we can talk about on this slide. Maybe we can save it for later, but I just want to skip to the 4 R's. I'm not going to take credit for this. And I didn't mention, but in the US, our team is spread out. So I'm in Chicago, as I mentioned. I have a colleague, Eric Anderson, in Dallas, and Delilah Panio in California. Delilah was the one who coined the 4 R's. So always give her credit. She's on the right-hand side, on the board, I believe, of Maple as well. So shout out to Dee. But the 4 R's are a great summary, basically. And this is the lighter portion. So hopefully you're almost with me here. So thank you for making it this far. The 4 R's are this, right? The first is reason. So everything we've talked about, what are your reasons to do this is super important. If you ever want to embark on this kind of path, some of those reasons could be, as we mentioned, capital, acquisition currency. You want to diversify some of your shareholders. You want incentives, right, for employees or for folks who really believe in what you're building. Credibility, right, because everything is made transparent. There's a lot of due diligence that goes into you becoming a public company. So the credibility is definitely there. And then obviously liquidity is an ancillary feature of doing this. So that's the first one, reason. The second is requirements. So obviously we have some requirements. As I mentioned from the beginning, TSX Venture has more flexible requirements. It doesn't mean that it's easier. We have stringent requirements for both exchanges because we also want to place some standard on which companies are able to go public. But as you can see, they're broken down from a very, very high level. The main ones are financial requirements. So as an example, the smallest a company can be is 500,000 Canadian in revenue. If a company is pre-revenue, they would have to demonstrate a 2-year plan, a business plan, as to how they get to post-revenue. One example. Having some working capital that's unallocated, right? Just set aside in case, obviously, for emergencies when you go public. It's quite important. History and expertise. Is this a company that's been in the domain, like in the industry for quite some time? Or is this a company that had a massive exit and a win in one industry and now all of a sudden they're in blockchain, right? That might not be the most favorable. Mike, I see you smiling. Management and board. Very important, just to focus on this one. Any company in the room, whether you're going public or not, the one thing we'd always recommend is think about diversity on your board in every sense of the word, right? Industry experience, gender, ethnicity, technical experience, public markets experience. Have they exited in the past? Have they had experience on the public markets? This is super important. So that's requirements. Reality. The reality is this market isn't easy, right? I think we all know this, but especially in 2022 and some parts of this year. So the reality is really, are you going to get interest from Canadian investors, deal makers, investment banks? And that depends on a few things, right? It depends on what vertical industry you're in, the market conditions, how much you're looking to raise relative to your evaluation. Do you have any nexus to Canada? Everybody had their hands up, so you have some nexus. That is honestly very helpful. They want to know, basically, from a banker's perspective, that you're not doing this as a last resort. Because they're going to be meeting with you and saying, well, if you're a darling of a company and you have all the fundamentals, and you can't raise money in the US, a very large market, one of the largest, if not the largest, So you want to skip this pessimism or cynicism, I should say. And the final one, are you ready? And you always gonna you want to work with folks like Cassels, whether it's counsel, audit firms. Guys, I don't know if on this side you just want to comment here.
Yeah, I mean, there's often when we get started, everybody's like, okay, let's go. Window, it's open. 45 days. We're going to be public. Oh, where are your 3 years, 2 years of audited financial statements? Well, it's going to take a little bit of time to get that. Is your board ready? Have you restructured? How's your cap stack look in your shareholder list? So there's a lot of things that need to be done, and the more that you can do ahead of time in terms of thinking about structuring. Everybody wants to minimize tax as well, deemed dispositions when you're thinking about going public. There's cross-border stuff, so it's just get involved early. It's not expensive at the outset, but the mistakes that can be made by trying to jam it later will lead to long delays, which I've seen, and potentially missing the window, or more expensive things in terms of trying to fix it up later.
And that's beers. That's this is our contact info. Obviously, love to support anything you're trying to do up north, whether it's public markets or not. We're here to help, right? And that's why we've been partners of Maple Business Council for quite some time. We believe in the organization, and that's an extension to you. So thank you. I know there's a bit of time for Q&A. If we want to save it and open it up, we can do that too. Yeah, sure.
Okay, so the ESG reporting regulations in the United States versus Canada are quite a bit different.
Mm-hmm.
With that being said, what do you perceive to be some of the challenges that companies would have if you're encouraging them to list both in the United States and on the TSX, right? And what are some of the challenges that you think that there would be if you're listing on the TSX first versus the SEC, considering what's happening with regulation?
You guys want to start?
Well, I'll take it in one direction first, and then we can come back to ESG in particular. And I worked with a company that is in the blockchain space a few years ago, and they found that the regulatory environment in Canada was a little bit friendlier. They would have been tied up in all kinds of regulatory challenges back and forth, and there would have been long delays. And we've seen the same thing with U.S. cannabis companies. Sorry, George, because TSX doesn't really do that, but coming up to Canada, where it's a little bit of a friendlier environment, they all do want to make a change to be listed on the TSX, and in particular listed on NASDAQ when if things open up down here a little bit. And same thing with blockchain. So they use it as a stepping stone, as sort of a training ground, where they don't have to necessarily, as long as we can do certain things and maintain the status of the company as a foreign private issuer as opposed to domestic issuer, they don't necessarily need to be Sarbanes compliant yet. And so they can get their feet wet, figure out the regulatory environment of being a listed company, all the reporting requirements, making sure you don't miss your deadlines, and then move down to the States. So I don't know specifically, it probably doesn't answer your question head on. I don't know if you have a thought on this, but I think it's analogous in the sense that it might be a good stepping stone to go there while they figure out how to reorient their business to fit better to meet the regulatory requirements down in the U.S.
Yeah, and one of the beauties of the Canadian regulatory regime is that when you're an SEC registrant, you can avail yourselves of a number of exemptions from the Canadian securities requirements and under the TSX rules. So once you become listed in the United States, then as long as you're complying with SEC regulations, you can generally avail yourself of, I would say, 90% of your continuous disclosure obligations, as long as you're complying in the US and filing your documents in Canada. So it becomes, and then we have, from a capital raise perspective, we have exemptions as well, where you can rely on your Canadian documents to offer securities into the US and vice versa, depending on the jurisdiction of the company. So there are ways that make it easier for issuers when they're cross-listing. There are other jurisdictions. I have an AIM TSX listed entity, and TSX thankfully has an exemption where you can be exempted from a number of the continuous disclosure and review requirements, as long as 75% of your trading value and volume are on another exchange outside of Canada. But even that is a challenge sometimes if you're right on the cusp of that, because then you're trying to, the regimes are not the same. Whereas in the United States, if you're SEC registrant, they don't base it on your trading value and volumes, because we already know that the SEC and the restraints here and the regulation is more stringent than in Canada in some respects.
I will answer also the ESG question maybe offline, but just so you know, we do have a group at TMX that this is under our company services team. So they look at ESG, really trying to promote education and awareness, not only for the company itself, TMX, but also all the listed issuers. So I'll get you some more information just on that piece. Okay, no worries. Yeah.
Just a really basic question. Doesn't being listed on 2 exchanges create valuation problems? If you're worth something on TSX and you're worth something else on NASDAQ, what do you do?
George, can you repeat your question for the audience on that?
So I believe what you're asking is, if you're dual listed, so TSX, NYSE, or TSX, NASDAQ, does it potentially create, or you think could create valuation issues or fluctuations? Is the answer? We were speaking
we were talking about that
this
earlier.
Yeah.
I think that the just the sheer volume of trading, and now you've got bots and ETFs, they bring that together very fast, in real time. So, you do, I guess you could have moments of an arb spread on the currency as between the two, or you've got a little bit more buying happening in the States and more selling over here. And it's not, you can have listings in 3-4 places. It doesn't just mean only 2. But that has a tendency to actually solve for itself, because any arb traders will find and eliminate very quickly.
And correct me if I'm wrong, but I think you can also list TSX in US dollars, so it trades US dollars.
Mm-hmm.
So you don't have the currency arbitrage. Like there's no currency difference. So when you're looking at your trading at the time, it's the same currency, so that there's no arbitrage there with currency fluctuations.
Thank you.
Yeah, no, great question.
Thank you very much.
Awesome, thanks everyone.
6 o'clock
Appreciate
on the
it.
nose.